All right, all right. What's going on with y'all? Happy Friday.
Joy to you, brother.
Did you have a good week?
Mixed. Some good days, some bad days. But made a bad trade this morning here and just letting it ride out to expiration. But yeah, it was my fault. Got impulsive and didn't look at the full picture.
You tried
But
to short the market again?
uh-huh. I don't know why I did that. I don't know why I did that. I looked at it and I said, well, it's got to pull back. It's got to pull back. And it didn't.
In the morning briefing, I mentioned I was going to buy a put, and I also continued to reiterate that all of us who continue to try to short the market are the fuel for it to continue to go higher, right?
Yes, you did.
And I did buy that put, by the way, but I used Monday's expiration. That way, if I was wrong again, then I at least had the chance for a weekend gap down to maybe save it. And then, of course, I kept it as small as I could so that if it did lose, I wasn't going to be too upset about it. So I ended up with a Monday, I can't remember what it is, a 700 strike put April 20, and it is down a little over 50%. It's 54%. Well, it says 100, but if you consider the maximum amount of money I paid for it, then I've lost about 50% of the money that I spent on buying it.
I'll be with you in just a second here. I got something I got to attend to.
Yeah, your robot going nuts on you?
My son's getting ready to go on a trip here. I'm gonna help him pack.
Oh, that's kind of exciting. So, let's see. We had some requests um, for a little bit of look back discussion on Thinkorswim. There's so many tools that this thing has, and one of the things that it has is called the Wayback. So, if we look or think back, way back, if you go to the Analyze tab up at the top and you scroll down, you'll find Think Back. Now, I have to say, the on demand here in the upper right is horrible. It is very, very horrible. The only time I've ever really wanted to use the on demand is when I close every single chart out, because this is going to try to load the on demand. It will try to load every chart you have, every watch list, anything on the sidebar. So if you want to use on demand, clear your sidebar, get rid of any widgets, close any extra charts out, and that means all of those charts that you see me use in the morning, the forex trader, futures trader, active trader, pairs trader, make sure they're all blank, and that way it's only going to load one chart and it'll help speed it up. And then when I used that on demand, I was jumping from one day to the next, and I wasn't using it for intraday at all. I was doing some swing trade analysis. And I mention that because when we use the analysis tab and we go to the think back, I also use this for analysis in a swing trade concept. So a little bit of information, if you've never seen this before, is it's end of day data for whatever it is you're trying to look at. If you want to use it on the futures, you have to specify what contract you're using. You can't just type in ES and call it good, because as you can see, it's not going to give you, if I can show some details here, it's not going to show you what you want, right? You need to specify what contract you want. So we are on the active contract. That's not really a problem. But what if I went back to like January of last year or January of this year? It's very likely going to give me some screwed up stuff, right? Because it's the wrong contract. So make sure if you are going to use this and look back at futures data that you put in the contract, especially for the contract that you think might apply, right? If you're looking at December or January, use the contract from December or the new one from January. So that's the only real issue. But a lot of people that I know who are using the think back are looking at options data. That's kind of the sweet spots, what makes it good to begin with. So let's get this chart out of the way down below. The end of day data means that when we bring it up and I choose a day, we're going to go to OPEX for January. That's January 16, 2026. I'm looking at Apple, and this is where Apple closed that day. It's how far Apple moved within the intraday. And then this is what the implied volatility was that day. So one of the things that traders can do is they can go back and say, well, what was the volatility back then? And then they can also put on a trade. Now, these trades aren't 100% accurate because we wouldn't trade options at the end of the day. We would trade them at some point in the middle of the day. And then, the bid ask spread is end of day data wide rather than intraday active wide. So we would have had hopefully a better bid ask spread. But whatever, we'll click buy and it makes us pay the ask unless you want to go in and specifically adjust how much you paid for it. And you can look at the back trade. So here it shows what trade do I have. And if I want a vertical or a butterfly or whatever I want, I can add that. And then it's going to show how that trade performed, or at least how that option performed, right? We can see after I bought it, it went down a little, then it went up, and then it went down some more, and then it expired. Now, it doesn't show that it expired, right? It just went flat line and then it fell off a cliff. But it was an option for February 20. So once we got to this point right there, February 20, there was no life to that option left. The rest of this is just junk. So that minus 739 way over here, that's not true. That's after it closed and it went all this time and then it fell down. And so you can't use that number. But I can set my mouse somewhere near the high of that yellow line. And when I look left, I can see what it was worth, right? It's $1,000 is what that contract was worth. So I bought it for, what is it? $8 and it went up to $10. That's not bad. Sounds pretty good, right? That looks to be about $10. So it made a little bit of profit and we could see that. And of course, we can jump through time to see what that option would be worth tomorrow, the following day, the following week. So end of day data. What makes this pretty useful is the ability to see the implied volatility, to adjust some of the settings, adjust the prices, and then see the outcome of that trade, how it would have played out using that end of day data. Now, we all know, well, let me say that differently. I'd like to think that we would all get out of the trade before it expired, that we don't take options trades with the idea of holding them all the way till the expiration date. You can, that's why the date is there, but I don't recommend it. And I certainly don't like to trade that way. I don't want to hold that option into the close. So I generally just get the heck out before then. You can try to gauge based on the day that it expired or the day that you would have gotten out, how much that trade would have made. And you can see what the P&L does based on the price action. So it's just a way to help you try to gauge how would this trade have worked. That's not very complicated when you're just using a single call or a single put, or if you get some stock added to it, right? We can go up here and say add some stock to this trade, buy 100 shares at, we'll make it 260. We'll handicap our trade, say we bought it at 260, and that way it's a nice round number. We'll just make it 50 shares for some GP. Now we can see how well that stock trade is doing, and the P&L date is based on what I set up there. But of course, you can start walking through time, and that'll change things. And you got a lot of choices to kind of play around with on this think back. So I've used it before. I can't recommend it enough. If you want to try to better understand what would happen to your swing trade if you was to buy it, go in the past and build one and then see what would have happened to it as time went by to try to get a better idea of what's going to happen the next time. It won't be a perfect correlation, but things like butterflies and iron condors, they're sometimes hard to describe when it comes to explaining to someone what's going to happen to that option if it gets run over or if price just sits there and doesn't do anything. I'm going to build a $10 wide iron condor here, and we'll just look at the P&L on that thing. Let's make sure I built it right. $3.34. We just bump it up there a little bit. And we've got $10 on each side. I'm not necessarily delta neutral here, but at least it's a equidistant iron condor. And we can see that when I put the trade on, we got challenged to the upside, so it began to lose money. And then when Apple fell back down inside the range of the wings, then the trade began to make money again. This trade expired on February 20, and so that peak is the maximum amount of money that this trade could have made because it was held into expiration. But you can see visually how the trade was handicapped by the move in the market. So you get kind of a feel for it, right? And that's kind of the idea behind using this think back. It does have value to it. And you can add all kinds of indicators back here, do all that sort of stuff. And you can compound these trades too. This one was for February 20th. Of course, we could have come in when it was losing. Let's go back. That was February 16th. So if we had come in on February 27th, when it was down, we're like, oh no, we're losing. We could have gone in and say, added. I'm changing the wrong thing. Let's move forward in time from the 16th to when did it start to lose? Let's see. February 16th is when we. Oh, January. January 16th is when we put it on. So it really didn't start to lose until February 2nd and 3rd. That's when it really started to go. So we'll go to February 3rd, a Tuesday, and then we could trade the same expiration if we wanted to, that Feb 20, and we'll just like try to buy a call, right? So you would generally do when you're losing. I'm losing. I need some money. We'll buy a call. Add that to it. Oh yeah, that really helped our P&L while we were losing. But if we didn't close that call out, then it didn't help later on. It actually became the source of our risk when the market fell back down. But we can close that call, right? That would have helped. We would close that using this here, trade date. We get on at 2-3, so we can go forward to, where do we want to close it? 2-5. Yeah, Thursday or Friday. I'd say Thursday looks good, probably. Let's go to the 5th, and then we close that call. We just add the short leg, right? Yeah, it took it out. I shouldn't have done it that way. I should have just had to put in the short, but that would have closed it. And if it was still showing up there, we would have that open and that close and that P&L showing on the P&L graph. But because I held the button down when I did that, it actually applied it and then canceled itself out. Go back to the 3rd and buy the 275, and then go forward to the 5th. And now we will sell a 275 without holding the button down. We bought it at 312. We sold it at 667. Just like I taught you guys the other day, We bought it at 310 and we sold it at 670. That way the math is a little easier. Even just say $3 and 650, we made $3.50, right? Easy math. $3.50 in profit. Not bad. We made over 100% of our money back. And we still have our iron condor on, so it was still making money as well. This was just a way to kind of cover some of our risk along the way. So you can play around with that think back and really give yourself an idea of, hey, what's going to happen to my options trade if I do this or that or whatever, right? And this was something that was requested by someone in the community. So, I wanted to cover it. To me, this has more value than using the on demand. The on demand is so janky. It's absolutely horrible. I can't stand it. But, to each their own. I remember finding out about on demand and thinking that I could go in the past and day trade on a rewound market and that it would be a good idea, right? Like, oh, maybe I could go in the past and practice. No, no, it unfortunately the platform is so laggy and broken and just completely disgusting. The interesting thing about using that on demand is, like I had mentioned earlier, if you clear off all of these widgets and you close down every single chart that you have except for one, you go into the options chain and set it at like an 8 or a 10, and then start the market that day and watch how the options prices changes through the morning session. I remember doing that quite a bit on the weekends when I wanted to understand more about how options prices are affected at the open. Because when you're trying to trade at the open, you're not being objective. You got a dog in the hunt. But when it's the weekend and it's on paper and you're just sitting there and you can pause it and rewind it and look at that price of the option and see how radically they change and how the market players come in, the market participants, and really move that market around. That's one of the things that got me to the point where I was not interested in trading the open anymore. How radically those options prices change in the first 20 minutes of the day just really got me to the point where I wanted nothing to do with them. And it's hard to describe just how absolutely broken and disgusting it is until you can go in and see it for yourself. So what do you think? You guys got any topics you want to hit on today?
Signet, that was in the actual not look back, but the other one that you were doing that in, correct?
Right, we were using think back right there. Go to the
Yeah, I
analyze
understand.
think back.
But when you were saying you were doing the observation on them on the options, were you using think back or were you using on demand to do that?
On demand. Think back is only end of day data and it's not moving.
Thanks.
Yep.
I have a question.
Yeah.
Um, we're reaching all-time highs in a lot of stocks, right?
Yep.
If I'm looking for um support and resistance, which there is none right now, would we use fib extensions to guesstimate where we would find support and resistance?
Measured moves, yes.
Yes. You can also use tools like standard deviation and linear regression channels, things like Bollinger Bands, Keltner Bands, even daily VWAP bands. Anything that has a band that puts a line over the top of you, you can do those too. I trust my own measured moves and the quadrant lines way more than those other things, but that doesn't make them irrelevant.
Mm-hmm. Okay. All right.
Yeah,
Thank you.
absolutely. So that think back, just realize that it's end of day data and you can take it from there. It has benefit. It really does. You just got to think about, how can I use this data? And it's more about trying to understand what will happen to my trade if, and then you won't be disappointed if you approach it from that way. The other thing that we had a request for earlier this week was to have a discussion on these charts that I use. Now that this isn't all of my charts that I use, because I have multiple platforms and I have multiples, because some charts can only be found on some platforms. And then, of course, some are universal. You can find them on both, and that's fine when you got it. But, it
I
just,
can honestly say I've never seen a broker junkie before, but
that's me, huh? There's a place called stockcharts.com, and they have some charts that nobody else has. And so I really like them. And then they have historic charts, and I mean like way back stuff that a lot of other brokers just give you this cutoff, and they're like, "No, you can't go past, say 2007. That's as far as you can get." But on trading on stock charts, you can go back, even before that, into the 90s, and maybe into the 80s on some things, like maybe the dollar or crude. I think you can go back that far. So, I do like platforms that allow me to make ratios, and you can make ratios on just about anything. There's so many new products that are coming out now that we don't have any historical precedents for, like mags. Mags is an awesome ETF, but there's never been anything like this before. And then tops is another, or top maybe without the S. No, it's got the S. Tops is another one, and it's the top 20 names in the S&P, or maybe it's the top 20 names in the Nasdaq. It's not any of these. I'm gonna have to go and look, but I've been recommending for a while now, take these unique ETFs and make ratios out of them. Another one is like the Mag 7 Up Volume, FNG. The FNG is the NYSE FANG index, but there's an up version of this and a down version of this. So you can take the up and subtract the down, make a ratio chart out of it. There's just so many tools out there, and it is nothing more than your own curiosity of saying, I wonder if we do this, or if we mix these, would we get something out of it? Who knows? Give it a shot. See what you get out of it. And then, of course, there's the why behind it. Why would I want to mix something like this, and what could I get out of it? I have a lot of conversations with AI about these kind of things, just asking it random questions like the TDEX. TDEX, and I saved this description because I think it's really good. TDEX is a way to monitor options prices. But there's a lot of ways to do that, right? But this one is using out of the money options prices, because that's usually where hedging takes place, in the out of the money options. So if the price of those options are going up, then TDEX rises. If the price of those out of the money options are going down, then TDEX goes down. And it's basically a question of, if they're buying those options, are they buying them at an elevated price or not? So I've got the VIX down below here, and then I've got the TDEX to help me kind of gauge what's the price of those options. If we see the VIX rising, but the TDEX is falling, then it really shows that, sure, they're in there trading the VIX, because the VIX is moving. It's going up, it's going down, but the price of those options are decreasing. That can give you clues, because when it comes to options trades, there's always the argument of, hey, did they buy to open that thing? Did they sell to open it? What the heck just happened here? All we can see is that there was a transaction. And when you ask anybody about it, they get lippy with some stupid answer like, well, of course, there's two sides to the trade. If somebody bought it, then somebody must have sold it, right? There's always that silly answer, which I hate. Thanks, Captain Obvious. That's not helpful. But looking at the price of those options as they're moving through from a day-to-day basis, it does give us some clues. If we see the VIX is moving and the price of those puts are falling, it kind of implies they're being sold, right? So, putting the two pieces together can help give us some clue as to what's going on out there and what's happening in the broader options space. VIX tends to be a tell on the cost of the broader market's options. So when the VIX is high, options in general, at least on the put side, are going to be more expensive. That's not for everything, but definitely for those growth names like the Mag 7 and those guys, the NY Fang group. But when I tried to make this into a ratio, I really didn't like the outcome. It didn't give me anything. So I leave it broke apart. That way I can see VIX down here. And when I'm not interested in, I just scrunch it up like that. But got the VIX on the bottom, TDEX on top. And if you're thinking, wow, TDEX, I've never heard that before. There are so many weird tools out there like TDEX that you may have never heard of before. They're old too. These tail decks has been around for a long time, but it's not really popular, and they don't get to sell you a subscription to something if you just look at TDEX. They want you to go get a sub at, Spot Gamma and Tradie Ticks and all of those kind of places. But if you can just bring it up on the chart, well, why not do that? In practical terms, TDEX calculates the normalized price of the out of the money put options on the SPY. These puts are set at 3 standard deviations below the current price, making TDEX a gauge of how much investors are willing to pay for insurance against a major crash. Ta-da! I thought that was a really good description, by the way. I didn't write that. I think that came from their website or maybe from the CBOE, one of those guys. OIC, CBOE, or the TDEX website, one of them. Either way, I didn't write it. So it's a great tool. And right now it's telling us that options prices are falling. And that makes sense because CTAs are buying and nobody's hedging out there. And it's just falling away, right? There's no fear. It's all risk on and everybody's excited to be long. And there we go. This is the Taiwan exports. We talked about this last week. I don't look at this on a day-to-day basis. It's a monthly chart. This is a 11-month or 12-month leading indicator on global market recession. The idea being if the all the companies that are buying chips and getting them from Taiwan, if their orders dry up, then Taiwan's exports start to dry up, and it's a leading indicator. It's fine, by the way. There's nothing showing there. This is one of those ratio charts. I'm comparing the 3-month VIX to the regular VIX. And if you're not familiar with VIX, a regular VIX is a 30-day VIX. So we're comparing a 3-month to a 1-month, basically. But, anybody who's been around for a while knows one market month is 20 days. So a 30-day anything in the market is a month and a half. But, who's splitting hairs, right? A 1-month versus a 3-month. So with this, you can kind of see it in the lines. The red line up here says short stocks as the ratio falls. And the idea behind that would be if we're up here and we're hanging out and we cross that red line to the downside, you want to be short stocks as the ratio is falling. This isn't a time to be buying. This is a time to be selling or shorting stocks. Same thing with the green line down here, long stocks as the ratio rises. That would be the idea that as we rise up through that green line, we want to be long stocks, not short stocks. And if you think about how the market has moved since March 31st, that reversal down here and the recovery out, and we've just been getting it ever since. And that is a really good example of why we would watch this tool. Of course, there can be fake outs. All right, this was a fake out where we rallied up from March 6th into March 17, and then we fell back down again. And then it can get really extreme too, where we have these whiplashes in a single day where we drop down and then we're back at the top. So, nothing's perfect, but it's a great ratio. And it's also a little bit of a tell on backwardation versus your normal contango situation out there. I know those words can sound really funny, but in the option space, when prices are more expensive farther out in time, that's what we call contango. It's the normal way of things work, right? It's pretty cheap here, but if I want to go out to December and buy some options, it's going to be more expensive. Anybody who's looked at options, I'm sure, feels that and understands that. It's going to be more expensive out there. Well, the same thing is true with volatility. Generally speaking, volatility in the front end is lower than volatility that's out to December, because so much could go wrong between now and December that we just don't know about, right? There war, drama, famine, all kinds of things could go wrong. So in the future, volatility is usually higher. And this normal shape, this contango, is what we expect to see, right? When we don't have that, then that's what we call backwardation. When volatility in the front end is more expensive than volatility that's farther out. So if I'm looking at a 1 month VIX, and that 1 month is more expensive than a 3 month VIX, then I know that we're in backwardation. Yeah, shadow trader does all the time. Peter Resnicek. You got to know the players, right? The guy, shadow trader, Peter Resnicek, he helped build the Thinkorswim platform with Tom Sosnoff and everybody way before it was owned by TD Ameritrade. It was him and Corey Rosenblum, Doc Severson, Corey, no, I already mentioned Corey Rosenblum, Don Kaufman, all those guys, right? It was a whole group of them. And when Tom sold it to TD Ameritrade, most of those guys left relatively quick. They hung around for a little bit, but most of them left. Don stayed, and he worked with them for years, even after TD Ameritrade owned it. And then finally he left too. But there's a trade chat rooms up here, and the Shadow Trader Lounge used to be the spot, and that was run by Shadow Trader, right? By Peter Resnicek. There's still lounges, and you can see, I mean, there's about 300 people in there, but it's not the Shadow Trader Lounge anymore. And it, people moved on, different group, but that used to be the hangout spot back in the day. It was either that or, sit in silence and trade all alone. That's boring. So all those guys also think alike. They focus on backwardation and contango and volatility. They all know the same things because they hung out together day after day. They built this platform. Don Kaufman worked a lot on the risk profile and building this out. And then he got hired at TD Ameritrade and went all around the United States showing different funds and firms how to use it, play with the settings and the buttons, and he would teach risk management, and yeah, all those guys are hung out together. I was looking at Tom Sosnoff this morning. He's getting into some new thing. Damn it, I don't remember what it was called now, but it looked like something to do with crypto. Lost Dog or something like that. He certainly looks rough. Yeah, Lost Dog, that's what it's called.
Well, just remember that Tom makes the bulk of his money owning a brokerage, not being a trader.
Yes, that is absolutely right. And I've seen him take some spectacular losses. I mean, don't get me wrong, we all lose. I'm not throwing stones at the guy. Just that you're absolutely right. He makes the bulk of his money through business, not through trading.
100%.
That is true. He thinks the technical analysis and the ability to read price is 100% false. At least in the older videos that I've watched. Everybody can grow, and maybe he has grown out of that sentiment, but as far as I know, he's a believer of random walk, and that the ability to anticipate price action is just voodoo. It's not real. I don't want to put words in the man's mouth, but it's a pretty popular, it's a pretty well-known position that he's taken, that he just doesn't believe in it. To each their own. I don't believe in astrology trading. So, you know, I'm sure there's some astrology trader out there who says that I'm an idiot and that I'm missing out. And that's okay. You know, I don't want to trade astrology, so I'm not gonna. And that works for me. No, you know, when I seen him lose, I don't know all of his losses, but I know a few of them. He shorted Apple, and after he had put on his position, Apple announced that they were going to do a stock split. Apple and Tesla both had announced the stock split, and the stock just exploded towards his position. And I might even be getting the timing off now that I think about it. I think it announced and it exploded, and he said that is way overbought. Looking at the implied volatility and all of that, it had moved too far, too fast. And he has this trade called the aggressive contrarian trade strategy. And the idea behind it, or the premise, is that when something has gone too far, too fast, then you aggressively take the other side of the trade. And so that's what he did. But it was a stock split that got everybody so excited, and that thing just kept on going in Apple fashion. It didn't slow down, it didn't stop, and it just kept on going and going and going, and it
He
ran
got
him.
run over with Nvidia also. He took the counter trend trade when Nvidia was a year or two ago, when Nvidia was running to the moon. He took the counter trade on that and got run over in that one as well.
And the other one was a Tesla trade, same thing, counter trend trade. He got run right the hell over. So, you know, maybe the highlight of that is don't counter trend trade, but it's not true. Counter trend trading is a good trade strategy. There's nothing wrong with it. Just you know, trades lose. So can't take it on, you know, can't
Go
take it
ahead.
personally.
How did I put it? How good are the strategies that Tasty puts out? Are half of them trash, or are they pretty good?
They are phenomenal unicorns. So what I mean by that is they have all this data, right? They paid a boatload of money to get Opera feed data. And they said, what are we going to do with all of this data? And they said, well, let's hire a bunch of researchers and ask a bunch of options traders questions. And that's what they did for years. That's what all those videos are from Tasty Trade. Any trade question that you could ask as an options trader, they went and tried to do it, and they would get the results. So asking a question like, what's the best out of the money credit spread trade that you could put on, for an example? That would be one of their questions. And they would say, looking at our look back data, the sweet spot is 42 to 65 days out with a delta of 20, and you need to get X amount of credit for that trade or you can't put it on. And our research shows that if you do that, then consistently and consecutively, you'll win more often than you lose. And this is the kind of payout you'll get. Great. Sounds awesome. That's what I'm going to do. And then they tell you, oh, yeah, we did a 10-year look back and we had 3 of them. Come on, man. Really? 3 in 10 years? That's worthless to me. Thanks, but no thanks. But that tiny little nugget of data, 3 in 10 years, they won't even say in the video, or they'll pass it by casually, like offhanded. You don't even catch it unless you're really listening for it. And they focus on all this other data about how this one was better than that one because we changed the date and the expiration and the delta. And if you do this and do that, all missing the point that, yeah, great. That outcome is awesome, except you're never going to get one, or you'll get one in 3 and 10 years. Thanks for nothing. So are their strategies awesome? Hell yeah. If you can get all of the pieces, good luck getting all of the pieces. But they also had other information in their videos, not necessarily strategy, but strategy related questions. Like, if I'm going to build a credit spread, does making a wider credit spread help? And if it does help, how wide can I go before wide is no longer helping and is actually hurting? They had a video like that, by the way. That was a great question to ask. You know, it turns out that making a one lot is okay, but I mean, a one strike wide, it's okay, but actually making it wider is more beneficial. It does help. And then on the other side of that, well, how wide is too wide? If it's a one strike, $1 wide strike like this, $5 or $6, I believe, was as wide as you wanted to go. I think they said 10 was almost too much and definitely not bigger than 10. But what if it's $2.50 wide? Then 10 was an easy mark, but 15 was acceptable. And I'm ballparking these numbers. It's been a couple of years since I watched the video. So if I'm getting the numbers wrong, my bad. But you want to watch that video and make sure that you got the numbers. So they do have videos that provided some really good insight. But as for their specific strategies on expiry and delta and how much money you need to get in credit and all that stuff, I found that they were mythical unicorns that you could rarely achieve just because you couldn't get all of the ingredients. He has done interviews with people, and I think that those videos are actually way more powerful. In those videos, they would ask him questions like, how do you trade? From all the learning that you've picked up since you've been running all of these tests, how exactly are you trading now that you know this information that you've learned? And in those interviews, it's been really insightful because he will answer very specific questions, and I've documented some of those answers. That's what I'm looking for here now. I've got a Discord that I put together. Well, of course you want me to log in. Let's go this way. And this idea of making a Discord is something that I've promoted before. Anybody can make a Discord. It's free. It doesn't cost you anything. Make a Discord and use it for research purposes. Say you want to research Tasty Trade videos. Great. Make a Discord just for Tasty Trade videos and then go out and snatch as many Tasty Trade videos as you can get. Pile them all in there, start watching them, and then you can take notes under the video and you can use it for your research. I'm looking for a specific Discord, and then I'll bring it up. Just got to find it. I got a lot of Discords. What are y'all going to do this weekend while I'm looking? Nothing?
Man, I got an outdoor ceiling fan to put up.
Like on your porch?
Yeah, under the porch, outdoors. It's under roof, but yeah,
Yeah.
I got to run the conduit for it.
You guys sit outside on the porch a lot?
It depends on how hot it is.
Yeah.
Too hot, we go into the sunroom where we have an air conditioner. By the way, did you get your air conditioner fixed?
Yes. The part came in Wednesday, and they came over Thursday and put it in. Oh man, I was ready to have that.
Yeah, I bet.
Oh, it's been a long week. All right, I found the Discord. So strategy collection, as you can imagine, a lot of videos under there. These are his covered call notes. Then I've got one for his long options, debit verticals, credit verticals, calendars, and diagonals, which didn't have anything in it. But I think I got some videos for it. I just haven't watched them yet. Iron condors, straddles and strangles, and then a little bit of the any kind of what the or some Greeks. Like he talks about the Kelly factor or the Kelly cryon. So I grabbed a little bit of that. But so debit verticals, 45 days to expiration in a low IV rank because these are debits. You're buying them. One strike in the money or one or two strikes out of the money. Actually, those aren't his. That's mine. After going through his stuff, I took some of his and some of mine. So never mind. That's what I put together. This is his. 45 days to expiration, high IV rank. 30 to 35 on the short leg, 20 to 25 on the long leg. Those are delta levels. Not higher than 35 delta on the short strike. Collect near 1/3 the width, 30 to 40% of the credit, and close near 50% of the max profit. And he says if you're in a spread that is losing, look to add a spread on the offside to try to manage your losses if you want to try to manage your losses, rather than closing the trade that you're in or even rolling the trade that you're in. Just leave the loser alone. And if you want to do anything, add something on the other side. That is from one of his interviews. And he's done a lot of interviews. Mainly because those guys that I named, a lot of them have moved on to do their own stuff, like Peter Resnicek. He's got Shadow Trader. And they'll invite him in and then, introduce him to their members, and they'll have a live stream with them and ask him questions. And of course, people just eat that stuff up. This guy right here interviews him quite a bit. This is the guy that runs Options Play. His name is Tony Zhang. He also worked for Tom Sosnoff back in the day at at Thinkorswim before TD Ameritrade owned it. He's one of the boys from the group. And in his webinars where he asks Tom questions, he asks really good questions, right? Like his trading community has traders that are putting questions in the chat, and Tony's a trader too. And they don't ask those fluffy questions. You're like, what's a call? They're asking really hard hitting questions, very specific about options, and puts Tom on the spot to get him to answer, which is where a lot of the data for these notes comes from. Is most of are from his videos. So there really is a ton of information out there, and AI makes it even easier. Rather than watching all of these videos, I bet you could get AI to focus on interviews with Tom Sosnoff that he's said things in public, and then get answers to his preferred strategies rather than what their videos highlighted as good strategies. Because hopefully I pointed out from the videos standpoint, their research videos, they'll tell you the best place to put on one of them trades, but they'll rarely tell you that the trade is some mythical thing that almost never shows up, right? Like that's worthless if it's never going to appear. There was this candle pattern that I learned when I was studying candle patterns. It had a 95 or a 97% success rate. I was so excited until I found out that it's a pattern that almost never appears, right? It's like once in a millennia pattern. Well, who the hell cares if you're never going to see it?
So you can get AI to extrapolate all of the useful information. I know that with ChatGPT, I can load a YouTube video and extrapolate like 50 bullet points from it in detail.
It
But
has to have a transcript attached to it.
mhm.
And now Notebook LM is good about reading those transcripts. I'm not so sure. With ChatGPT, I usually have to copy the transcript myself and port it over.
No, you don't have to
No.
do that. You don't have to do that.
Okay, so it can read it now. Okay,
Yeah,
good.
yeah.
On Notebook LM, by the way, it understands the M4A file, the audio file. So you can now just grab the audio file and give that to Notebook LM, even if you don't have the closed captions transcript. It all it needs is the audio file. I do that every single day to Notebook LM, so I know that one works just fine. As for what I was saying about Tom, he has a lot of public interviews, so he's on record. You can talk to AI, just talk to it. Don't give it anything. Just talk to it about Tom Sosnoff and ask it, what's his public statement? His, not research that he's done. What is his public statement on credit spreads, debit spreads, butterflies, whatever, right? Let the AI go get that data. Don't feed it anything.
Note 51.
Guarale, pinche. You know what I mean? That way
Okay.
you're not on the hook to try to go find the data. Let AI go find the data.
Okay. But with Notebook LLM, is that an app? Is that like ChatGPT?
It's a Google tool.
Oh,
Here,
okay.
let me bring it up because I've got it saved on this browser.
Notebooklm.google.com.
Right?
Notebook language large model.
Just type in Notebook LM. It's owned by Google or run by Google, or at least
Okay.
it used to be. Maybe they sold it, probably not. And once you're on there, it has topics across the top, and you can just create new notebook and you feed it information. It will give you a podcast. It'll give you bullet points. It'll give you all kinds of things, right? Just all
Oh
kinds of
man.
things. So here's one that I made for today. I fed it a live stream. It gave me the topics from the live stream, and then I asked it for the stocks that were mentioned. It gave me that, and if I wanted to, I could start asking it questions. I also told it to generate a market briefing document, so it generated a document for me. And even though this was a one-person podcast or a one-person interview, I can now ask it to generate a two-person podcast from it. It'll make a male female personality, and they'll discuss between them the topics that were in this data and turn it into a podcast. I've done that with books, by the way. Give it a PDF and tell it, hey, here's a PDF book. I don't have time to read it, but turn it into a podcast. And then if you want a report or flashcards or whatever, it'll do that. You want to take quizzes on the data.
Yes, that's what I want to develop. I want to develop like discussions here and other places. I want to develop a quiz for myself to make sure I got the information down. But what I know this is probably a stretch, but what I was wanting it to do is extrapolate the actual um like chart that they're discussing, pull it out and show it. Do you know what I mean? Like from the video. I don't think AI is able to do that just yet.
Claude or one of those could after you taught it to do it, but none of the free things that are out there that I know of are going to be able to do anything like that.
Okay, gotcha.
So
Hey, Signet,
you'll want to go to Claude and make it.
Okay, I found something I'm gonna try this weekend. There are a couple of apps that I think might do it, so I just need to take the time to try it out. Okay, thank you.
Yeah. So they do have some good information. Funny enough, after working through most of their stuff, I don't use any of their strategies. I use my strategies, but mine are based on what I learned from watching their videos. You know, they did some great research, and their research informed me on how I want to make my trades. And then I look at my own trade results along the way, and I've made adjustments over the years. They're one of the biggest reasons why I don't like to trade a strategy that uses far out of the money options. I just do not like it. And it's not to say that I will never trade out of the money options, because that's not true. I will. But there's traders out there who think that their entire trade strategy is going to be some, 60-day out of the money option where they're collecting 45 cents and they're going to hang on to the trade for 3 weeks and they're going to be some kind of premium trader. That's trash. And I don't want anything to do with that trash. And I reached that point from their research and from my own trade history. But you can certainly learn a lot from what they have in all of the data that they've gathered.
There's so much information out there right now. It's like trying to drink through a water hose, a fire hydrant, or however they say it. It's so much information.
There certainly is a lot of information. And then we're not seeing it much yet, but the misinformation also. I mean, it's not bad, but it's getting worse.
I think it's pretty bad. You don't think it's pretty bad right now?
I think it could be so much worse. The kind of bad that I'm thinking of hasn't happened, and I'm not even going to talk about what I have in mind, because I don't want to see it come true. But it's not as bad as it could be. It's bad enough, isn't it? I mean, it's bad enough.
It is to me.
It's pretty bad, but it could be so much worse.
Sigma,
So,
is there any videos out there on using that notebook LM on how to use that, like what you were talking about doing?
I don't know. It was so intuitive that when I started using it, I literally just started using it. I pulled it up and I just started using it. I didn't need a how-to. That's how simple it is.
YouTube videos
Yeah.
discuss. Yeah, it'll show you.
I'm 1,000% sure that if you go to YouTube and type in how do I use Notebook LM, that you'll find a boatload of videos. But it was so intuitive that I didn't need one, right? Like I push the button and look how it starts. Drop your files here. It'll take PDFs, images, documents, audio, and more, so that if I have questions on, well, what else will you take? All of those. Oh, damn. So I can give you any of that and you'll accept it. Great. So it was so intuitive, I didn't even need a how-to. If you do, YouTube, how do I run Notebook LM? And I'm sure somebody out there has already done a step-by-step tutorial.
Will that take video series, like for an example, even like your options thing that you did, and summarize it all?
That would require that you have one of the appropriate files. If you just have the video itself, unless closed caption was turned on, I'm pretty sure it's going to say no.
Yeah, but you know what? I had an issue because you had a really good video and it didn't do the it didn't
Closed
save
caption.
the closed caption. So there's another app that will transcribe your voice and it'll write out the entire dialogue of the video. And then you can feed it back into ChatGPT and tell it to pull out all of the right information that you want.
Right.
What source was that?
Let me pull it up and I'll put it in chat.
Now, what I use every day in this is the M4A file, because that's the audio file from a Zoom meeting. Every Zoom meeting, if they save the files, has an M4A. And so I save that. And then I just grab that M4A and I throw it in here, and that's all I use. And it works just fine. I don't have to go transcribe the video or anything else. I have the actual audio. The problem is if you're watching somebody else's Zoom and they get the file, like you guys are on my Zoom right now, you don't have it unless you clicked record and you're recording it. You don't have an M4A file. I do. You don't. So if you have the file, you can just use that. If you don't, she's going to give you a website. You can go there and get it transcribed so that you do have one of these and then feed it to it.
Signy,
Yeah.
you ever thought about doing that with these here? These videos that you're doing now?
My afternoon live streams? No.
Yeah. No.
I mean, I haven't thought about it because I have no use for it. If you guys want it, I can upload it. I don't care. You know what I mean? It's no skin off my back. But as far as I was concerned, nobody wanted it. Nobody's asked me for it. I just delete it.
Ignorance is bliss.
Yeah. Yeah, because we can give, and there's still somebody else going to be standing there saying, hey, you got this? You got this? So I learned long ago not to give this place 5,000% of my day, spending 23 hours in this office just giving and giving and giving, because somebody's still going to be standing there saying, hey, can you give me this? So now if nobody asks, you don't get it.
There's
I'm
a
only here
way down.
part-time.
Weigh-in video will do it for you. That's why you know, rather than try to figure it out. I mean, it'll do it. It'll just take that entire dialogue and transcribe it for you.
Now I do know that if you go to like the Google one, Gemini, if I catch Gemini off guard, I can give it a full YouTube video, like literally just copy a YouTube link and give it to it and ask it questions, and it'll do it 2 or 3 times, 2 or 3 questions. And then when I go to do it again, it suddenly realizes I'm asking for a lot. And it's like, hey, I'm not going to do that. But I've caught it off guard and I've had it answer questions.
Is that for the free version? I thought the paid version would do it.
I don't know about the paid version. I was just talking about the free version.
Okay. Kimberly, that site that you gave, is that for YouTube videos?
Yes, that's how I because a lot of what Signet some of the videos they don't transcribe, and so I had to go out and find that particular weigh-in video thing, and it'll take all of that and put it in dialogue. And then I pull that and then throw it into ChatGPT and then tell it what I want it to do.
That's a good solution. If you didn't have that, another thing that you guys can do is you can record these streams, right? You're watching from your device. So if on your device you happen to run something like OBS or some other kind of video capture, you could be recording all of this on your side. Not saying you have to. I'm just saying, there's so many solutions,
That was the old way of doing it.
right? That is the old way of doing it. There's so many better ways now.
Yes.
Well, that eats up a lot of your storage too, recording that stuff. Unless I'd just rather rewatch it on YouTube, which is what I've done on some of these. So
I get it. Every day I watch a 2-hour live stream and I have to download those files afterwards, and I delete the video file immediately. And then I keep the M4A and I keep the closed captions transcript file. And those are much smaller documents. But yeah, the briefing documents, I mean, these briefing documents, they look really good. I'm just going to randomly pick one. This is from Notebook LM. Now, it opened it on this browser, so it doesn't have that white, but normally it would be looking like a normal PDF. It gives me the briefing of the person that was talking, the full summary of the highlighted topics, and then down at the bottom, it's got the stocks that were mentioned, and if there was any targets given or stops or anything associated with it, then I have that too. And since I have the documents that made this, at the end of the week, I can gather all of them and say, okay, the week is over, and I could just ask it all kinds of questions. What should I not do? What area should I focus on? What industry, what sector, what's hot, what's not? Really helpful, if you have a data source to be able to just fill it up.
And Signet, what you're now able to do with the videos you can break them down into shorts.
Yeah, isn't that cool?
So yeah, that's so cool. It's like there's parts of, instead of watching a 2-hour video, you can extrapolate and just have it give you a short on it, and that way you learn it that much faster.
Someone was asking me if they could do that to my morning briefings, turn it into shorts. And I was like, help yourself. You know, I'm not going to tell you no, by all means, if you want to do it. And they're just like, well, I want you to do it, but I'll do it for you for the first couple of times just to show you what it looks like. And I'm like, I'm still not going to do it. So if you want them, you better get used to doing them
Yeah,
yourself.
just do it yourself. Especially on the ones that I want to see, that's particularly important to me. I just make a short out of it.
Yeah. But
I'd
I
rather
mean,
just
you know,
rewatch.
you got to give it to them. They were persistent, you know. They're like, well, I'll do a couple to show you how good it is. I'm still not going to do it. So I was thinking about what new broker to open because I pretty much closed the public down. And
You tried Tradier?
I have a Tradier. Yes, sir. I do have one of those. It's connected to my options data that I post in the chat every morning.
I've had I don't know about Tradier. They look so good. You pay them that $10, $20, $30 a month to get the zero option cost and blah, 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 except for SPX. They're still going to charge you for that. It looks so good in so many ways, but there's just always something not right in the back of my mind, and I can't put my finger on it.
So
I don't know. Go ahead.
stockcharts.com is affiliated with Tradier, and on stockcharts.com they have a specific kind of charting software that they have. It's here with this ACP charts, or it's sharp chart, one of these two. When I click on it, it's going to take me to that, and that ties in with Tradier. So they're like, this is the one. If you want to trade from here, you can do it with your Tradier account. So I was like, all right, well, I'll do that. Here's the link right down there. If I wanted to trade, this would take me over to Tradier. And then when you're on Tradier, they're associated with another company that's called Trader Volatility. I'm going to just bring over the Trading Volatility, not Trader. And that's this website right here. So it's kind of like, I don't want to say pyramid scheme, but I mean, it kind of feels like it. One supports the other, supports the other, supports the other, and they're all just kind of linked together. Let me get logged into this one. Every day I share data from the Trader Volatility website. That's where the list is for TradingView and Thinkorswim. This is where it comes from. So I'll get logged in. Yes, I accept. Yes, I am me. Okay, I think I'm in there. So this is their homepage. I go to my personal watch list, and then, come on, you can do it. Maybe I broke it. When I get there, it has these sharp charts, like you would see in an Excel document. Call wall, put wall, bias here in the middle, what we should do with it. If it's near a GEX level, it'll tell us that. And then down here at the bottom, these are the levels that I copy every day and I post in the chat for you guys. And this is the list of stocks that are on it. And I can change that out, but I usually don't unless one of those names change. Say a company gets bought or something like that, or just randomly it'll break and I'd have to try to figure out what name isn't working. A couple of ETFs are in there, and then I try to keep it stocked with liquid names. And then I download the list. But even though I mostly use it for that, it has so much more. I mean, this place has a lot of tools. SPX 0-day chart. Let's bring that up. And this, I'm using it for free, but I can't remember how I got it for free. Maybe it's because of my stockcharts.com account. Yeah, and I was sharing this stuff for a while, but everybody was like, I don't use it. So I quit sharing it. This talks about the different regimes, whether we're in a positive GEX, a negative GEX, and what that can look like. And then you use these reference examples for what we are looking at up here.
But that's not free, is it?
It is free if you have an account with stockcharts.com. Otherwise, you would need to get an account here. Or maybe it's Tradier. If you have an account with Tradier, then you can use this for free. It's one of those two. And I know I got a Tradier account for free because I have stock charts. And I think I got this for free because I had Tradier, but it's just one or the other, or maybe both. So the short answer is just get a subscription to stock charts. And from there, you can get Tradier. And from Tradier, you can get this. Don't cost you nothing.
Okay.
Signet, how does
Is
this compare to Mentor Q?
Mentor Q? I don't have
Yeah.
a sub to Mentor Q.
Okay.
Nope, I have Spot Gamma instead, and they're very close to the same. I had a sub to Mentor, but I don't know. They don't like comp accounts at all. So like they'll give you a comp account for a little bit, and they're peeking over your shoulder the whole time. Are you done yet? Are you done yet? How many subs did you get us? Are you done yet? I'm like, man, your stuff ain't that awesome. You're about as good as anybody else that's out there. They don't like that answer. With all these tools, you know what? I was talking to somebody about this the other day. They're helpful sometimes. And I know how obvious that sounds. Nothing's useful all the time, but even dealer positioning and hedging and options flow, it's only useful sometimes. Not all the time. And we're in an environment right now where it's not that helpful. It really isn't. And that, I know that's not what anybody wants to hear, but that's the kind of environment we're in right now where it's not that helpful. What am I looking for? I don't see it. Oh, it's over here. Now, this site is one of the most complex sites that I have. This is a very complicated place, but they have an academy to help people understand their product, which is cool. It's a free academy. You don't have to pay for it. I'm trying to log in here. It's not often that I come across a place that is talking options and leaves me completely dumbfounded. I don't know everything about options, I promise you, but I usually at least grasp the logic of what you're talking about. Not with these guys. This was so far beyond me that even I was sitting there going, what is that? Is that an alien? Is that walnuts? What is that? I don't know. Complicated stuff. The subscription that I have is the very expensive one. I think it's $1,300 or $1,500 a month. I don't pay for it, so I don't know, but it's up there. They have cheaper versions. You guys see me post their midday or early notice in the morning. I did it today for an example, right? The comment when I say this is from Ball Land and then whatever they write, because they send me text messages twice a day after they've analyzed their data to give me new updates. So when you're on their website, if you was to go over here, I'm not signed in here. And I believe somewhere around the top up here somewhere, it should have Academy right there. You can use that Academy for free and check out their FAQ also for free and their resources. And they're live on YouTube every morning. Every morning. Jason, he's he's kind of funny. I gotta admit, he surprises me how funny he is. Of course, they got their own Discord, their own server, their own service. They're on Twitter, all that. But these guys are very bold, and they make comments like Spot Gamma's trash, and I wouldn't pay $1 for their service. That's a pretty bold statement, considering how many people use Spot Gamma and love it. So I only thought of this because somebody asked about Mentor Q. When I was trying to work with Mentor Q, they were very arrogant and aggressive about their product being the best stuff out there, and nobody had anything like theirs, and theirs was the most accurate and the best. I didn't think so. I thought it was as good as Spot Gamma. If somebody was to ask me which product I would want to buy if it was my own money between those two, I would just buy whichever one was cheaper because they were that good that neither one stood out as better or worse. But this group is above both of those, completely out of the entirely different range. So by all means, check them out. AI knows about Volland because it is a very sophisticated platform, and they've got a lot of research papers and white papers that are published. So you can get your hands on those papers from the About section under their resources and just take the actual documents and feed it to AI so that you and AI are both talking about the same thing from the same document, and it can help you as well. Great platform. I can tell you a lot of their stuff still has me going and looking at my notes, just trying to figure out how to use a lot of it. One of their founders got into a fight with the other founder and shut the entire platform down and was holding it hostage. They had to take him to court, get an injunction, close a Discord and open an entirely new Discord. Their tools weren't working. They had to build out all the tools from scratch because the guy was holding the keys hostage. And so now some of the tools are different because they're making all new stuff thanks to that guy. It was a big mess, all kinds of corporate drama. Maybe it'll turn into a video, something like a movie. We'll see it on Netflix. The kind of stuff, you know, that goes on out there on a day-to-day basis. Kind of makes me wish I lived in New York to be right in the thick of it. And then I'm glad I don't. IBKR, I did, Hugo. I did. I had clients who wanted to trade options, but they were Canadian and they didn't see how to do on IBKR what I was doing on Thinkorswim. And I ended up having to get the platform to use it myself to figure out how to show them what I was doing on that platform, the same as what I was doing on Thinkorswim. So I do have an account there. Once I was done with that client, I quit using it. I've forgotten everything since then. It was not a funded account. Maybe it has $50 in it, maybe, but I don't use it. I don't like it. It's a big complex system, just like Thinkorswim is. And I've already got one big complex system, Thinkorswim. So I didn't waste my time trying to learn how to use it on a day-to-day basis any more than teaching that client what he needed to know. What I do tell people about brokers is, especially for anybody not in the US, if IBKR is your broker, then knuckle up, get down to business, and watch videos and study and learn how to use that platform until you know it as well as the car that you drive, because if that's what you have, then you need it. So what I find instead is people say, well, I want to learn how to trade. I want to learn about candles and standard deviations and math and indicators and blah, blah, blah. No, throw all that out and spend the next 6 months figuring out how to use that broker. Because I promise you, the videos are out there, especially with you tying it into AI, and you can get to the point where you're a master at that broker. And that's what's required for a complex broker like that. For us US people, we got so many brokers. We can just go to something simple like Webull or IBKR's version of Webull or whatever's out there, right? Doe, Tasty, Tradier. The platform that IBKR, it's a really powerful platform. It does not suck, but man, it's complicated.
I thought it was just me.
No, it's clunky, right? I think that's the best word for it. It's like clunky. Yeah. So these guys got all these crazy widgets, and LIS means line in the sand. That level will update through the day. Paradigm, if you guys have heard me say that word, it's their word. They've got a whole white paper on it. And they're the ones that really highlights that we're not always in a dealer positioning paradigm, that maybe it's crude. Maybe it's VIX, you know, maybe it's dealer positioning, maybe not. So I like that, you know, that I don't know. I did not know Jason from anybody else out there, but they came to the same conclusion I did along the way. Spot Gamma always assumes that whatever's moving the markets must be related to the options, and they never ask what if it's not. So if I was to say anything about Mentor Q or Spot Gamma or any of those kind of places, is that they always assume that it's always dealers, it's always options, and that's just the way that it is. But we all know that there's no always in the market, except that it'll always kick your butt. And so we need to be mindful that maybe we're moving today because of something other than options.
Tacos.
I like tacos. So that's a good question. There's a question about putting on a vertical trade. And we're going to use Microsoft because I like Microsoft. I really think it's going to run into earnings, by the way. All those Mag 7s, I think they're just going to keep on going right into earnings. Here's the thing about a credit spread. I'll show you what the industry says, and then I'll show you what I say. When we go to put on an options trade, we definitely want to know that there is liquidity. Microsoft's a common, well-known name, and it should already be liquid, but should and is are completely different. So look at the bid-ask spread. It's a little wide, but it is Microsoft, and we can see from the volume that there is a lot of participation. I want 4 digits typically on every strike. But if I'm seeing 3s and 4s, and I know it's Microsoft, I'll give it the benefit of the doubt. Just like I asked Marcidi the other day when we were looking at Microsoft, should we give it the benefit of the doubt just because it's Microsoft? Yeah. Microsoft, Google, Apple, Amazon, just give them the benefit of the doubt. So we've got a reasonably decent liquidity, but it's $5 wide at the bare minimum. So that's going to hurt a little bit because the wider the spread is for your most minimum value, that handicaps you. If we're at 421 and I'm using a 420, 425 vertical, then I'm really close to the 420 and I'm not anywhere close to the 425. Or if we was at 424, I'm really close to 425 and I'm not really close to 420. So that's why a really wide minor vertical is a bit of a handicap, but do what we have to do. Then it's the earnings problem. a lot of people say, well, I want to put on a credit spread for earnings because it's very likely going to take a vol hit. And they think that selling the implied volatility in a credit spread will allow them to take that premium crush and put it in their pocket. If that's your plan, don't do this trade because that's not how it works. It's fake. So I put implied volatility on down here, and we can see that it was really high into earnings, and then they reported and volatility fell. Looks great on paper. We should totally sell options, and then when it reports, it's going to get volatility crushed, and our options are going to lose all that volatility, and we'll make money. Yeah, but it doesn't work that way. Now, I haven't shown this in a long time, so maybe you haven't seen it, and it's been so long, I'm not sure I can remember how to do all the steps. I might need to use the way back or the go back. The main thing, let's find the options for earnings. That looks like this expiration right there, April 24. Am I right? Where's earnings? 4:30. I'm a week off. We need the May ones. How did I miss it? By a week. May. Oh, shoot. There it is. It is big. All right, May 1. Those are the options. 47. I was looking for the big one. I missed it by a week. 2 weeks, really, it looks like. So there's the options that we want. The implied vol is 31. The idea is that we could get the options and they'll get vol crushed before we get into options expiration. Today's Friday. These options are about to expire. Look at the implied vol. It's 48.82. Look at the implied vol of the options for earnings. 47. Where's that vol crush? We got a vol crush here, a little bit there, but it's starting to rise again. It's going back up, not down, right? So if you get those credit spreads now and you hold them into that options expiration, the implied vol is going to rise as you get closer and closer and closer and closer. So if you go out and you trade those now and hang on to them, the idea would be, oh, well, they're going to decay, right? Because we can see the decay. I just walked up. What if we walk back? We'll buy them, we'll sell them now. And every day that we get closer to expiration, they'll get smaller. 29, 31, went a little high there. 29 again, 23, it's getting smaller. Oh, shoot, it got big again. That's exactly what's going to happen for your earnings. These options do not play well with earnings. So if you trade the earnings options, they're not going to decay correctly. You'll get stuck in them, only getting out if price favors your move. So what I mean by that, if you get these options and the stock decides that it wants to just hang out, we sell puts, for an example. We'll sell them right here in this box. And as long as price stays above this box, those puts should decay and we'll make some money. Problem is, earnings is coming. Price could sit right here and do exactly what we want, and those options won't decay. You're going to get stuck in it all the way to earnings. And that's not what you want. At least I hope that's not what you want. The only way you would actually get out of that trade is if you sold those puts and price ran and ran and ran. Now that would do it. That would make those puts decay because price crushed them, not vol, not time, price. Time's going to get stuck, vol is going to get stuck, and you will be solely dependent on price to get out of that trade, which means you might as well buy options, because if you need price to move for your trade to make money, you might as well be on the buy side, not the sell side. The reason we sell things is because we don't need price to move. We just need it to stay above a certain level. So think about the why of the trade. What do you need for it to be profitable? If it's an earnings trade, could you wait until earnings is here. Like, are you trying to make a decision of whether or not it's going to perform well for earnings or bad for earnings? Are you looking to play the ramp into earnings, something like that? And if you do want to play the ramp, Microsoft has options with 3 days to expire now. So does Apple and all the other Mag 7s. So you can play Monday, Wednesday, Friday options, and you could do that every day, right? Sell tomorrow's options today, and then tomorrow sell the next day's options, right? Just stay a step ahead or 2 days ahead. And that way you're dealing with a much narrower time frame. But if you're trying to do the industry standards version of a credit spread, they'll tell you go, 30 to 40 days out. So here's an OPEX for June 18, and they'll tell you to go out of the money and sell something out here. I need delta. Yeah, they'll tell you to sell something like a 15 to a 10 delta. So we could sell something like the 490. Actually, I think you're on the put side. Let's go the other way. 15 delta. Do a quarter number. 375, 350. It's 25 points wide. We got 330 in credit. Cheers. There you go. But I don't like these trades, right? Now, that's what they'll tell you is your setup, and whether or not it's good will be based on, well, how much credit did you get? A lot of places will tell you get 1/3 the width of the trade. If your math is a little weak, there's always the calculator. What is 1/3 of $25? Just take 25, divide it by 3. You need $8.33. We're $5 short. They're not giving us enough money. We either need to make this smaller or move it closer to the money. So let's try 400, 375. That's closer, but we need 8 something. So how about 410, 385? Got our money. 405, 380. I think that's it, right? What did we need? 8, 6. But you're looking for 1/3 the width. So you can just keep moving up and down until you get that 1/3 the width. And now you've got enough credit and you're out of the money as far as that 1/3 gave you. The whole premise for is it a good trade or not is what are you trying to trade? The earning itself, the ramp into earnings, the other side of earnings. So you're saying you think price could move down to 393 after earnings, and you want to play the short into 393? After earnings. So for that, there's a window of time that we have to be careful of. It is 10 days before the report and 20 days. I did that backwards. It's 20 days in front of the report, 10 days after the report. You don't want to get options inside of that 30-day window, 20 on this side, 10 on that side. So if you're saying, hey, after earnings, I think we're going to fall to like 390. Great. Choose options that will expire outside of this window. And that means the May OPEX is probably off the table, or it'll be right on the edge, and you would want to use June. Well, that's cool because those are the same ones that I was using, right? I traded Microsoft this week and I used June, and I did that to avoid the earnings as well. So you would want to use June options that are outside of that window, and then you'd want to focus on the same thing, a credit spread versus a debit spread.
Signet, that was a 30-20 or a 20-30?
2010. They add up to 30 days in total.
No. I mean days before and after.
Yeah, 2010. 20 days in front of, 10 days after.
Okay, 2010. Okay, I thought you said 30. Okay.
they add up to 30. So that's the idea. I have this chart that I grabbed in a YouTube video once. Somebody made the mistake of showing their Thinkorswim share chart code, and that's all you need, right? If you can see the code, you can write the code down and type it in yourself. And I paused the video and I took the code. They were trying to sell this chart right here for a couple of $100. The custom indicator. It's got some of my indicators now as well, but they were trying to sell that for a couple $100, and they showed the share link in the video. So I just paused the video, wrote it down, typed it into Thinkorswim, and was like, yep, thank you, appreciate that. You gave it to me, so don't get salty about it. Now I give it away to anybody that wants it. You'll notice this window around the earnings. So go back over here to Microsoft. 21.20 and 8.10. That's the window that I was referring to. Combined, it's a 30-day window. So if you think it's going to sell off after earnings and crash, you want to try to decide between a credit spread and a debit spread. The credit spread isn't going to decay well because of the earnings. It will decay because you'll be outside of the ones that are going to be expiring or going to be affected by the earnings, but honestly, they'll all be affected. You could sell them, to be fair. You could sell some calls. It would work, but you'll get stuck during that 30 days. The implied vol and all of that, it's just not going to behave well. But it will work because you're going to be outside that window as long as you use like June's options. Would I do it? I wouldn't. I think if you think it's going to sell off, there's a cheaper way to take the trade, right? Limit your risk. I'm all about managing the risk because you can trade anything as long as you've got a good grasp of the risk. So if I thought it was going to fall to 395, I would be asking, what could I buy that would allow me to make money into the 395 area? Something like Butterfly would be relatively cheap, probably, or a vertical trade. Here's a Butterfly using 390, 395. It's 15 cents. We could move that a little bit. Come up one strike. Now 395 is in the middle and it's 13 cents. So let's make it a little bigger. Actually, I went the wrong way with that. That should have been 405. There we go. Now it's 65 cents. This is a $10 wide Butterfly. It will pay almost $900 if we land on it. If we get within $10 of 395, it'll start to make some form of money. And it's only going to risk you 68 cents to do it. And that's before we kick one leg out and turn it into a skewed fly of any kind that could make even more money. This is just your basic everyday Butterfly. Looks like that, right? So for the possibility of making close to $900, all you got to do is risk 68 cents. And you can layer these on, right? If you're willing to risk $400, put on 4 Butterflies and stagger them into different locations. Put a tent at 410, put a tent at 380. You have tents all over the place. No matter where it lands down there, you're going to be making money. And combined, you might have $400 worth of risk down there, but your chances of hitting one of those tents goes up. Of course, you could still make it a little bit bigger, or you could point the entire trade up or down. Say you think your risk is that price is going to fall down, but it won't fall down enough. And so you need to get rid of this upside risk. Then you can skew one of these legs out. Let's see what happens if we bring that back to 4 and we unlock it. There we go. We got rid of our risk to the upside. Microsoft is at 423. It could fall some and I'll still make money. Hell, it could go up. I'll still make money. The only way that this trade will lose is if it falls all the way down and breaks over the bottom of this at 390 and falls even lower than that. So if Microsoft stays above 390 or 389 or whatever that is, you make money. Your bare minimum profit is $1.02. Not a bad way to go right there, yeah? That gives you upside protection indefinitely and downside profit into the tent, and the risk under 3, just call it 390. That is a broken wing butterfly. And you'll have $1.05 in credit when you start that trade. Now, technically, that is a credit spread. So it is a time-based trade. Price could fall all the way down there tomorrow. You are not going to have any profit. You will need time to go buy. You don't need to wait until it expires. Within a week and a half of expiration, you'll start to see some good profit in there, but it will take time, right? And we can visualize that. This is a June 18 expiry. We can visualize that by walking forward in time using this calendar right here. So here's the end of April. Now we're into May. Let's get to the end of May and start to see what that profit does. This is May 31st, June 1st, 2nd, 3rd, 5th, 6th, 7th, 8th, 10th, 11th. Woo, getting there. All right, now we're starting to see some profit, right? And that's the bullseye. And we're just now getting to where that would be break even. You wouldn't have made any profit yet. And that's on the 13th. It expires on the 18th, 14th, 15th. Now we've got some money in the bullseye. And it's not to say that you would be a loser, right? If it would have some form of profit, but you need time to go by is what I'm saying. Now, this calendar isn't exactly perfect. As price falls, vol changes and everything else, and this P&L is not a perfect representation. But the main thing about a butterfly to understand is it does need price to time to go by. So if you get one that has 2 months of life, you can't close it in really good profit in 2 days because it just won't have any. You're going to need to hold on to it for a little while. Still, it's a good trade. I like this kind of trade. Now, a bad trade would be, say, we think it's going to fall, and so we go out of the money and we sell one of these things. $10 wide, $1 credit. I see that trade more often than I would like. That is a bad trade. How do we know it's bad? Just from the amount of risk. We're risking $9 to make $1. And then to top that off, most people who put on these credit spreads will close them at like 50% profit. So now you're risking $9 to make 50 cents. That's really bad. Then there's the probability of this losing versus the probability of it winning. It has a decent liquidity, but could we choose something else out there and maybe get a little bit better price? There's a skew. So if you go too far out of the money, you actually skew things the wrong way. You remember that old t-shirt that says buy low, sell high, or the bumper sticker or whatever? If you look at the Greeks, the implied vol starts low and then it gets higher as we go. But if you go too far out, it'll actually peak and then it'll start to shrink again, right? Because it's a curve. Let's add more strikes and see if we can find it. There actually isn't one on the call side right now. 34, 35, 36, 37, 38, 39, 40. Nope, it just kept going up. Let's see the put side. Sure enough, that one doesn't either. That's kind of neat. There's no skew in there right now. Maybe we'd find it in SPY. I have pictures saved somewhere of an Apple trade that I built on the wrong side of skew, and then I moved it to where it was on the right side of skew. The thing about buy low, sell high is us looking at what we're going to sell versus what we're going to buy, right? Because in a credit spread, we would sell this one and we would buy this one. So if we're selling a 32.95 and then we're buying a 33, we're selling low, buying high. In a credit spread, we would want to do like we do on anything else. We want to sell the expensive one and buy the cheap one, right? But we can't. So, there's just no skew in here. We scrolled out. We couldn't find any. You can look to try to reduce your skew. A lot of times what I do is pick big zones. This is a big zone. 3,000 traded today, 41.5 on the books. Sell that one. And then buy this other one that's also really big. This one, 5,000 traded today, 20.6 on the books. Now I've got a $10 spread with $2.32. It's not great, but it's better than that other one. And that's too far out of the money. Yeah.
Seeing the question for you, can't you use the skew chart down below on the options chain to see the skew?
You can. Yep. That is another way to go because it is down there. There's also skew charts that you can use, but when you're trading, you want to just get her on, you know what I mean? Like you just want to get it. So if I come in and I'm trying to find my contract so that I can get the trade and move on, I won't come down here hunting around for that skew. I will be focused on scrolling down through that options chain real quick, looking for the skew and where it breaks over. So we want the call side, and then it's always at the top. I don't know why I do that. Implied vol. Now cut some series out of this, turn them all off, go to June. There's your skew. There's the breakover. But see, the breakover is really close up here. That's where the money is, 422. So breaks over at 440. If we were looking to use that skew for the out of the money option, we would want the breakover to be farther away from the money. The money's 420. Price is basically right here. We want the breakover back here so we can use that skew to our advantage. And we can't use it far out of the money like that because it's way up front. That's where it's at, and that's how you can do it.
Dana, do your videos go through that proportion of explaining that?
I think I did during the implied vol 20 video class that I got on the Bullish Bears.
Okay, that's. I thought I saw something. I wasn't sure if I couldn't remember. I need to go back and rewatch that.
I had someone say, "Damn, 20 videos," and I was like, "Yeah, but I could do another 20." Like, there's so much stuff about volatility. 20 videos didn't even cover it all. That's the bad thing, and they're long videos too. I wish I could say they wasn't, but there's so much stuff that goes to volatility. It's crazy. But on the other hand, that's how much volatility affects our world, right? Like volatility is in everything. Yeah. So with credit spreads, I'm a real big fan of getting near the money because you have a lot more control over the trade on the kind of losses that you're going to take. And it just puts you closer to price itself. If your trade is wrong, you know you're wrong. You can get out, you lose a little bit of money, and you just move on. But those far out of the money trades, you really just don't know what you should do. And nobody does. There's no good answer for those. So my solution has always been just leave them alone and don't trade them. But whether or not we want to put one on and would it work, the way I approach this sort of question is really simple. I mean, it's really simple. It's focused on the idea of, do I think price can get above or below a particular level by a particular period in time? So if we take June and the June OPEX, we can add that line to the chart. Just come up to the gear icon, go to general, and show, maybe we need one more page, price access. We want to put the time display on there. There we go. Time access, show expiration Friday. And when we do that, we get these lines here. So there's the June OPEX. Now I've got the right side. I know how far to go. And I can add a line anywhere, say where we are right now. Do I think we'll be above or below our current price by June OPEX? They make a cross. It's right there. And if the answer is no, I think it'll fall by then. Okay, fine. What about May? You think we'll be above or below by May? Oh, well, it's too close to earnings. Maybe we can't use that. But you get the idea. You have a date and you have a price. Do you think we can close above that? Or do you think we'll close below that by a particular period of time? And if the answer is yes, then go put on a trade. And at that point, well, which strike, which expiration? For me, since I always do mine the same way, we don't need 100 strikes anymore. I run things near the money or on the money. And by on the money, that would be one in, one out. I look for half the width in credit. And just looking at that number tells me if they're being shady and pulling shenanigans. It's $5. If they offer me $3.25 and I built it at the money, I don't want it. Why not, right? It sounds great. They're giving me an extra $75. Yeah, they're giving you money that you shouldn't have. Doesn't that make you paranoid? Because it does me. If they're overpricing it, trying to entice me to take the trade, I don't want it. That's a sucker's bet. They can keep it. If I build it at the money and I'm not even getting half the width, then I can see that it's underpriced. They're not offering me enough credit. This trade is worth $2.50. If it says 220, I'm just going to work the order, put in 250 and wait for it to fill. Keep coming back, kicking the order throughout the day and keep working at it until I get filled at 250, maybe 247, 248. You know, in the real world, we got to give or take a little bit, but I'm not going to take 220 for it when I know it's worth 250. So this, if that doesn't fill, or if I just want a little bit of room, or if I'm just shopping around, I'll step out of the money a little bit. I had one in, one out, right? 425, 420. But we can step out and look, I got a better price. How you
Hey,
like
Stanley,
that?
you know you're live, right?
Yeah.
You're not on paper.
Yeah.
Okay, just making sure.
I do appreciate that, by the way. I ran a whole live stream on Tradeovate on futures, and I thought I was in paper, and I was buying and selling all willy-nilly random. I was not on paper, yo. I was live. I had so much commissions that day. I didn't really make or lose any in the trades, but I had a boatload of commissions that day. So I do appreciate you mentioning that. I'm live. This trade actually had more credit in it than the one that was at the money. That's 227. That's 240. I'm out of the money, safer, farther away, and they're giving me more money for it. Why wouldn't I take that? I mean, that sounds better. But now that we're finding money out of the money, let's go a little further. Nope, that's too far. So the sweet spot, as we saw in the curve, right? When we went down and looked at the skew curve, the curve is right there. And that's the sweet spot, $2.42. I'm near the money, not on it. And I've got a reasonably decent amount of credit right there, 255. Sold, I'll take it. That's the kind of credit spread that I like to do. If you put one of these on in paper, 62 days to expiration, and then you go out here and you run some 15 delta out of the money trade for the same amount of time, watch how both of those lose or win. It's really the losers I would want you to study. The one near the money is going to lose. They both will lose if we're wrong, but it will lose less and it won't lose as fast. So you have more time to make a decision to find a way out of the trade, and getting out of it is easier. You'll be able to roll it or adjust one of the legs easier because you're near the money. It has more trading activity. It has better pricing. All around, it's better to manage. It loses less money. It doesn't lose as money as much as quickly. There's just so many benefits to trading near the money as opposed to far out of the money on that sell side for premium traders. Plus, look how much credit you get, right? When you can get 250, when those out of the money premium traders are getting maybe 50, and then they're cutting that in half, right? They're getting like 25 cents and they're all excited about it. Why are they excited? Because they thought they could put on a trade with no technical analysis and that it's going to win 85 or 90% of the time. And they're not wrong. Unfortunately, they're just not making enough money to cover the losers that will come. And it doesn't work out. This way works. And you don't need to worry about how much implied volatility there is. The out of the money trades have to have a high IV or a high IVR. Otherwise, you won't get enough credit for them. Well, that's a dangerous situation. If you hunt for things with a high IV rank, you will find very violent stock prices. You don't want to put on a trade that says, I bet you won't move on something that's moving really big. No. That's a bad idea. This allows you to sell premium on anything and do it near the money and get a nice credit for it so that when you are wrong, you take a small loss, get your hand slapped, move on to the next trade. Much better process. In theory, this should use technical analysis, right? In theory, but you can run it just like you run those other kind of credit spreads. You can run it based on anything you want. The fact that it's Tuesday or it's the third Thursday of the month or any other arbitrary reason that you want to get into the trade. You can just flip a quarter and take the trade. It won't matter because the probability that that trade is going to work with the amount of money that you're going to get for it and the fact that you close it early gives you edge, and you will make more money than you lose and you will win more often than you don't. That's edge. That's a trade strategy. That's pretty awesome.
Thanks, Signet. I appreciate that. That's a good one.
It's my favorite.
You getting out on the bike?
I have an appointment next week and we don't know if the construction is going to be in that area. So we were talking about getting the bike out and driving it into that area just to see if the construction is really bad, and then gives me an excuse to get the bike out. So that's kind of on the agenda this weekend, but I don't know if it's going to be today. It's been a rough week. We had a whole week with no AC. It was miserable all week. Even our cat is miserable. Still miserable. It's mad at us now. Won't even talk to us.
I'm surprised you didn't get a hotel room or something.
You know, I really thought about it. I did. We had a lot going on though, so it wasn't in the cards, and we just had to suck it up and take it, and it sucked.
The poor man's air conditioning is to have your wife hose you down and then get on the bike.
Yeah. The a bucket of ice in front of a fan, that works pretty good.
Yeah. Puts a lot of humidity though in the house, which is not good.
Yep. Plus you got that fan. I mean, I don't know if you guys can hear it, but I have a fan running in my office at all times just for like noise control. Hopefully it helps with the dog barking and that sort of stuff. But having one on the desk is completely different than having one in my office. But it's been a rough week, and I don't know if we got air conditioning yesterday after not having it all week. So I don't know. We might. The boss hasn't told me what we're doing yet.
You're supposed to be getting a front coming through, aren't you? because I know like Denver and them are getting some snow or something like that this weekend, so it should be hitting you guys pretty quickly.
I
If
know
they're
that
not getting it already.
that was coming. The AC we found out it quit working Sunday after the cool weather had just passed us, and all the weather forecasts were like, well, it's gonna get warm, and we're like, oh dang, we don't have AC now. I'm looking at the weather right now, and it says 40% chance of rain and strong winds. So I'd say probably not getting the bike out. That's a bum deal. But after the week I've had, I'm kind of okay with not getting the bike out. That American Airlines trade that I put on the other day, I closed that with about 100% profit. I left it on, and then AAL started to fall, so I went ahead and I closed it out. The put that I bought is still down. You can see that it's at $38 now. It was $1.02 this morning. So we'll see what happens over the weekend. That's probably going to just go ahead and lose. The if you guys remember, I was trying to get this to group correctly, right? And it wasn't doing it, and I couldn't figure out why. I figured that out. So if you have a Tasty account and you're trying to do the same thing, it's the group buy button right there. How do you want to group your trades? And at some point, for some reason or another, that got changed to no grouping. And so it would individually list every one of my contracts, and it did not connect them together for verticals or butterflies or anything. And then you couldn't see, well, what's my trade worth? So you don't want it on none. You want it grouped by symbol, and that way it'll group them. And you can also do order chains or sector custom. You got choices, but that's what was wrong. That's what wasn't working. Oddly enough, I found that today because I was going to email them, and I was taking pictures, and I was circling things in the picture to send them in the email, and I seen that group by none, and I thought, well, before I send the email, let's see what other choices there are, and then that's when I found it.
Dig, a quick question for you. When you're taking these trades, and you said you're posting them, are you posting them in a specific chat or just in the main one?
No, like that AAL I took live the other day just so I could talk about the grouping. I didn't even know what AAL was doing at the time, other than I was bullish on it. The SPY put, I mentioned this morning in my morning briefing that I was going to buy a put after the market opened. So
I remember that.
Yeah, they didn't get posted. They were just voiced. We used to, when I live streamed every day, when I was working here full time, I would trade live, showing my broker, picking my strikes, my expiration, rolling the trades. All of it was done live. But now I stream in the afternoons, and a lot of times in the afternoons, there's just nothing that I want to trade, especially on Friday afternoon. Getting into a swing trade with this president in the afternoons, not my cup of tea. Wednesday trades would be more likely, but I have to be careful because I manage my trades. I'm willing to roll them, adjust them, tweak the strikes. And a lot of people, they might be here for the entry, and then they miss when I post in the chat, hey, I'm rolling this leg, or we're rolling the whole thing, or we're adding something on the other side to defend it. They don't see that. They end up with a loser. I don't. Then they get salty. And I get it.
That's why I was asking if there was an actual chat room that you were posting them in, because I thought you did that at one time.
We were doing it for a while, but the feedback that I was getting from people is these are complex trades, and we're not catching it when you roll them or adjust them or fix them. They just wanted straight calls and straight puts, basically. And I rarely trade a straight call or a straight put.
It's Mayor. Manage at your own risk.
Right? So it finally got to the point where it's like, look, we're not even a trade alert service to begin with. If you want a trade alert service, go get a trade alert service. We were sharing our own trades. And I don't like a straight naked call or a naked put. for my default trade, and I don't want to just take a trade without defending it. That's why I trade options, so that I can defend it. So I got rid of the saltiness by just not posting them. Unless I'm taking a single call or a single put, I don't mind sharing those. But yeah, we're not a trade alert service. We've thought about it, but it's a boatload of responsibility, and we end up with a whole community full of people who don't even have a clue as to what they're doing, and they're just like dogs waiting for the bell to ring. Give me another trade, give me another trade, and have no clue what they're doing. And then you have to manage them rather than managing the trades. We went through a period of that back in, I don't know, 2019, 2020, the whole COVID thing. This place filled up with people who had no idea what they were doing, just looking for another trade.
That's dangerous.
Very dangerous. And then, of course, they don't like it when I was telling them, you don't know what you're doing. You shouldn't be trading this, right? Because then I'm the bad guy, the voice of reason. I just don't want to see people lose money, you know?
Yeah, you all have a great weekend. I got to run.
You too. I hope you have
It's
a great
Friday.
weekend.
Thanks, man. You all have a good one.
You too. So I don't know what the new account is. I've got this project that I've had in mind for a long time, and there's always been something that interrupts me, and then I don't get the project done. So I'm thinking maybe I'm going to try it again. That'll be on Trade-of-8, but I don't know. Every time I've tried it, the recordings didn't get done, or I wasn't consistent with it, or we had a trip to Denver that screwed the whole thing up. There's always something.
Did you ever look into that Moo, by the way?
Yeah, I love the platform, but when they rejected me and said, no, that's a dual account between you and your wife, and you signed up for a single account brokerage, they denied me, and they sent me this whole list of what I needed to do to solve it, to get it funded. And I just never tried to get it funded after that. I should. It looks like a fantastic website, and I've still got an account there. It's just not funded because I tried to open the account for me. And when it came to the deposit, they were like, oh, no, that's a dual account. That's you and your wife.
Their little platform's pretty good, Signet, especially on the phone. I have a couple bucks. I don't have a lot in there. I just have something where I can, look at their platform mainly for stuff if I ever want to look at it. But it actually is really good for, because they actually have some of that options flow stuff in there. And there's a lot of news like you're seeing there. They have a lot of stuff too that's on the phone. It's amazing.
I really like them, which is why I was going to fund them. But man, I got salty when they denied me over that dual account thing. I'm like, are you kidding me? Really? With so many brokers at my disposal, you want to reject me and make me dance to get an account? So oddly enough, I still go here every single day, but I don't know. I've got good options brokers already. I love Tasty as an options broker, and Tasty has Doe for my phone. So when I am on the phone, I've got Tasty original, and then I've got Tasty the Doe version, and both of those are excellent on the phone. So I don't know. I might fund them and do some trades, maybe like some iron condors, or what's their commission schedule here?
You'd have to look it up. It's been a while since I've done anything. I generally do stocks in that. I just buy, some divvy stuff or whatever in that just to keep it active. I haven't played it in a while.
Robinhood style. $0 unless you're on the SPX. Nice.
I wouldn't mind trading on them if they traded like Thinkorswim, where you can trade the underlying on an option,
Yeah.
the price. That's gold
They,
right here.
they have options.
Yeah,
Yeah,
but
they
can
have
you chart
options.
the option? That's what she's saying. Can you chart the option? Because you
Yeah,
can go to the.
I think you can. I can't remember if you can or not. I haven't played with that in a long time. Again, it's been a while since I've been on there. I generally look at it on my phone. So
Yeah, that, and when you go to the wheel thing, and you can put the symbol and the trigger and where you want to get in at the real price. But then I learned something this weekend. I mean, last couple of weekends ago, that I don't even have to do that. I could just go to the expected lunar price and then put in how much where I want it to stop out at once I reach target. So I learned about that. So
one thing I really like about Thinkorswim that a lot of brokers don't have is the market on close. Those are excellent for day trades. If I get busy, I can tell this thing, hey, make sure my day trade today gets closed before the end of the day, no matter what. Just get me out.
that's pretty
Especially an
cool.
option trade,
Yeah,
you know?
yeah. That's or when you take the trade at a specific time, and you can go grocery shopping and know that it's going to get done.
Yeah, because those out of the money options, they get to zero bid, nobody is going to take that trade, right? So if you're like me and you just want it closed, you know it's out of the money, you know you're safe, but so what? You just want the damn thing closed before the end of the day. They'll do it because you can put a market on close order and guaranteed that thing is going to be closed before the bell rings. And you know you're safe. I like that. A lot of brokers do not offer that, and I wish more brokers did because I really like that.
I wonder why they don't do that. I mean, take a page from talk, just steal their idea and make it their own.
Heck yeah. I just tried to fund them, and this time they said no, they don't take funding from third parties. I don't even know what the hell that means. I have it linked to my own bank account. I'll have to read their description on what song and dance they're going to need me to do. I decided I'm going to fund them, but not with much money. I'll use it for iron condors and butterflies since it's a zero commission broker. That means that we don't have to pay for all those legs. So a multi-leg trade like butterflies and irons will be perfect. I'll put like 100 in it, maybe like 150, and we'll just run like 0-day butters and condors and short little verticals on financials like XLF. See how far we can grow that 100, 150, whatever I use. But I've still got a larger chunk, and I'm thinking it's probably going to end up in the futures. I've had this idea that I came up with like 2 years ago to grow out the account like I generally do. I take a small amount of money, throw it into an account, and grow it out. That's where all of my money started from, is from doing that, and I still do it. But I want to record every trade that's taken. And every time I've tried to do this, at some point I end up growing the damn thing on like a 2-day period without the recording, and then it just screws up everything because it's like, well, yesterday I had $800, today I've got $1,800. Yeah, sorry, after the recording I took 2 more trades and this happened, and so I don't know. Maybe I'll try it again. There's nothing wrong with the prop firms. I know it's a big thing that everybody likes the prop firms, but there's something to be said for having your own account, even if you just grow one out from $300 or $500. Just grow your own rather than starting with a prop account. You know, $500 turns into a really big account pretty quick. It doesn't take as long as you think. And then once you've grown it out, you just, shave off a little bit off the top and use that to go fund a different account somewhere else, like Moomoo. Then you grow that out and go open another account somewhere like Robinhood. Just populate them like flowers all over the yard. So if I do get Moomoo opened, we'll do the same thing as I'm talking about with the Trade of 8. but we'll do it for shorter duration stuff and 0-day stuff, depending on their 0-day rules. I don't know their 0-day rules, but say Robinhood will close your 0-day around 1 or 1:30 in the afternoon. So, that can seriously screw up some 0-day plans. I don't know what these guys are like. I'll have to get it funded and find out. All right, everybody, let's call it quits and take it into the weekend.
Alrighty. Well,
Great one.
you got some riding to do this weekend. I got a ceiling fan to put up this weekend, among other things. There's always a list, right, of things to do.
Marziti, I know you was jumping around to different brokers. Did you give Moo a shot?
No, Chinese, no.
You didn't want anything to do with it, huh?
Weeble, Moo, all that kind of stuff. No. Not me. I've got accounts. I've got an account, obviously, at Thinkorswim, Tasty, Trade-Evate. I do have an IBKR account. It's got about $500 on it. I've never taken a trade on it. Like you said, I could not make heads or tails out of how to use the platform. So it's just got a little bit of money in it. Just keep it open. I've got a Robinhood account with a couple bucks in it. Never use it. I've got a Coinbase trade account that I've not been able to get into for nearly a year now because they won't respond. They won't unlock it. They won't respond to my questions or anything. It's a password lock, apparently, and I can't get it reset. I've tried contacting them, no response. So fortunately, there's hardly any money in it, but it just irritates the crap out of me that I can't even get back into the account. I had an account with Lightspeed years ago because they were supposed to be the fastest broker for options and blah 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 blah. But I haven't used them in years and years. No money in that. I tried TradeStation. TradeStation was a nightmare to set up. Real nice and modern looking, but I ended up spending more time on the phone with tech support over how to configure an indicator. Because you'd add an indicator and all of a sudden your chart would just go totally wonky with total expansion to all bands of the indicator and stuff like that. I'm like, no, I don't want that. This, and this, and reasonably nice folks, but no. So I let them go. Trying to think, is there anybody else? I think that's basically it. But I actually did like Robinhood. Back when I used to trade crypto, that's where I traded it. And
I still do.
It did fine. No problems there. I know they got that new Legacy or Legends platform. I've not given it 5 minutes, so I don't know anything about it.
Me either. I know they got it, but that's it.
I thought about talking to them to see about setting up this credit spread account that I have on Tasty to see whether it would be cheaper, more responsive, but they're a big pay for order flow outfit. And so, the general vibe is that, you have a lot of slippage on Robinhood with options. And so I said, well, maybe not then.
And you don't want to do 0 days there because they will auto close your 0 days.
Yeah, absolutely. Well, I know with Jeremy, he had some, I don't know if it was a 0 day or just a 2 or 3 day option. Anyway, he had a credit spread on and they closed his long leg and left his short leg open. And
that's
he
so
caught
dangerous.
It. He was furious.
Yeah. That is so
absolutely
dangerous.
Furious. I can't believe that they would do that, but yeah. So, but at any rate, always something somewhere. But no, I'm learning the Tasty platform. I like it for the most part. No platform's ever going to be 100%. But you know, it's nice to be able to go into the Thinkorswim, for example, and if you know how to put the two symbols and add the two symbols together or subtract them, excuse me, you know, actually find out where your credit spread is, put stops on it easily. I find it difficult to put a bracket order on an open order on Tasty. A lot of times I have to hunt around to figure this or that out or whatever. So, you know, but I know Thinkorswim from, you know, years and years and years of using it. But it's gotten so bad. Like, I mean, it's gotten worse. I was telling Signet the other day, for those of you still in here, that I took a credit spread using Thinkorswim. Trade moved in my favor. I made 30-40%, closed the trade out. And it said, I got a message that the trade was closed out, but it still showed up in my positions tab. And it still showed up over my monitor tab that it was still open. And I was like, what the hell? What's going on? And I did this and I did that. I tried to refresh and all that kind of stuff. Thinkorswim, by the way, uses Chromium. Uses Chromium. So a lot of times you can hit F5 to refresh the screen. I think. I'm not sure. Anyway. Anyway, I ended up just simply totally closing out the platform on the PC, giving it 30 seconds, relaunching the platform, going back in, and everything was right. I was like, what the hell? So I don't know. I'm just having so many issues with Thinkorswim lately that I just can't trust it anymore. I hate that because it's the platform I know the most. No, best, I should say, whatever.
For my swing trades, I'm okay with Thinkorswim, but for day trades, absolutely not. I just refuse. But my main issue with them has always been seeing my trades, seeing my P&L, and I'm so comfortable with them, I can do it. But when I was new, that frustrated me so much.
Oh yeah. I mean, and to be able to do it in advanced order, especially if you're in a credit spread on something like the SPX, but you're charting the ES, and you say, well, the ES goes here, close out the credit spread for profit or loss or whatever. That's nice to be able to do that. That's the only broker I know that does that. And you mentioned market on close, because if I'm going to do any kind of an option on an equity, then you better believe I'm going to put a market on close order on it, because if I get distracted, I do not want to get assigned. And I mean, unless I haven't done the wheel in a while, but if I were going to do the wheel, that would be different, but that would be the exception. But beyond that, yeah, I put a market on close.
The Tasty Trade is so awesome. For those who are listening to us, I'm on Tasty right now. This was made by options traders for options traders. And I know that sounds like an advertisement, but no kidding. Look at my options chain. I grabbed Microsoft. I can see the dividend. I can see the earnings. I don't have to go hunting for it. I can see exactly where it is. If it's a weekly or a monthly, so here's June. I go in and I look at June, and I want to know what's the implied vol average for the June 18 options contracts. It's where it is on most brokers, right up here in the upper right corner, 34% or $42 plus or minus. But this orange bar is that same data. So if I want to put on, say, an iron condor, and I want to run it on the edges of the expected move, I would build it right there, because that's the 34%, right? That's the $42.24 expected move.
Yeah.
It's built in. And there's so many more features that are just like that. Little nuggets of data, right? That you're like, oh, wow, I didn't even notice that. These dashed lines, that's a 1 standard deviation. So if I wanted to build the iron even farther out, I can use that. This thicker dashed line is a 2 standard deviation. And those same deviations are here on the curve. There's my 1 standard, there's the 2 standard, and there's my expected move. All just like it was on the chain, but now it's here, and there's my curve.
There wouldn't be any money in the trade, though, is there?
For an out of the money trade like that? I mean, probably not. Let's see if we did a credit spread on that 1 standard deviation and then one on this side. There is $1.17 in a $5 wide trade. And I built it on a 1 standard deviation.
Not a lot of money.
Not a lot of money, but that's about what you would expect for an iron condor that's $5 wide.
Exactly.
Yeah.
Yeah.
But built by options traders for options traders. Now that I built it, look down here. It has pop. And most brokers do. That's probability of profit, 55% chance that this trade will make at least 1 penny at expiration. But it also has P50. And that is unique to this broker. That says that I have a 64% chance of hitting 50% profit somewhere in the life of this trade. That's good to know. Then it's got the delta, the external, the theta, my max profit, max loss, and buying power effect all right there before I do anything. Right? And then I can slide the slider up or down. I can adjust it from debit to credit and then change the good till cancel and all that right down there.
And you can actually put a bracket on it if you wanted to, like a take profit at 50% and a stop maybe at $3. But that's the problem with credit spreads, is oftentimes your risk is greater than your reward, especially when most people take their reward at 50%. So your risk is even more. But you have to be careful that credit spreads can get jerky with the price. And when that happens, just a momentary glitch, and I see it happen all the time, literally all the time. A momentary glitch of an option could say, well, it's $1.05, it's $1.05, it's $1.10, it's $1.10, $4, $1.10.
Yeah.
And then you get stopped out. And that happens with credit spreads. And when you got 4 legs going on there, you better believe that it's going to get jerky and all over the place. So it is something that you just have to watch it. And, if you start to get run over, you just have to close it. And that's just all there is to it.
But when it comes to trading, I love this platform. It is really handy. There are some things they could do better, but for the most part, I really like it. And to adjust the trade, you can just grab it and move it, jump expirations. You can roll easy. I love trading here. When it comes to options, I'm really not interested in going somewhere else unless they have something special that these guys don't have. I'm feeling pretty comfortable with the one I've got, you know what I mean? But there is commissions here. This is not one of those free places because they're doing their best to help you, not to help somebody with your data. So it's not free, but it's not prohibitive. And they got a ceiling of 10 contracts. So if you want to run 20 lot or 50 lot, you only pay for 10 contracts. The rest of them are free. That's really nice too. I love that. But new traders don't need to worry about that because you should be trading 1 lots or maybe 2s. Keep them small. It's a really good platform, great information. You can build your own watch lists. They got, tools for that. It's got a built-in TV show if you want to watch them. It now has back testing, but I haven't used it, so I have no idea how to use any of the back testing stuff because they didn't have that when I had studied using this, and I haven't had a reason to learn it. But they do have it. Their charts are okay, and there are some custom paid for indicators. You don't have to have them, but they do have like spot gammas indicator, and I believe they have some of simpler trading indicators that are built in here that you can buy from simpler trading and activate. But don't buy indicators, please. Just don't. They're not gonna help you, I promise. There's no reason to buy an indicator unless you're on TradingView and it's using some kind of options data that they have to pay for, because then you're helping them pay for their data. but don't buy indicators. Just leave it at that. There's no reason to buy an indicator.
No, especially when you can chart on somebody else's platform, for goodness sakes. I mean, really.
Yeah. But their charting is decent. It's not fantastic, but it's okay. You can pimp it out a little bit. They've got some really wonderful features. And when it comes to seeing your P&L, seeing your trade, I love it. And the choices that they have for closing it aren't as good as Thinkorswim because they don't have the market on close, and that would be fantastic if they did. But if I go to close it, I can just choose what profit do I want? 50% profit, 45% profit? Do I want a custom number? Or do I want a quick roll or choose an expiration, choose strikes? It will automatically bait away your trades for you, which is really nice too. Love being able to bait away a trade. Just bring it in and be able to throw it on there and pimp it out and see what happens to my trade if SPY goes up or if SPY goes down for your whole account, not just for one trade. That is so nice. You can run cap requirements in here. So if I had a bunch of trades, I could start turning on and off different ones and asking from here what would happen if SPY goes up $5, SPY goes down $5. What's going to happen to my entire account? You'll do that in your risk analysis tab. Really awesome platform. It really is. It's great. And futures are good too. They recently updated their active 2. So they have an active and then now they have an active 2. It's more of a normal looking dome than the other one. The other one was a bit futuristic. It was a bit odd. It was kind of hard to use. And since there's no paper trading, you just had to get in and do the thing, learning how to use it live, which sucks. You don't want to try learning how to use a platform by literally using the platform. You want to be able to do it on paper, push buttons, break things, and not lose money just because you're trying to figure out how to use it. But trading futures is good on here too, other than the fact that you have to have 25% of the futures contract. It's not like Trade-of-8 or Ninja where you just need 550. Here you need to have a percentage of the total contract. This is what the regular version looks like. So here's the ES. See if I can stretch this thing out. Maybe not because the market's closed, but you would trade from, this is their dome. And you would see the ask and the bid lines spread out, and last would be moving up and down, and like the whole thing is done right in this small little window. But normally you can broaden it out, make it bigger. I'm not able to do that right now, which makes me think it's because the market is closed. Hopefully that's the reason, and that they didn't get rid of that, because that's going to suck. I'll have to check that Monday. I haven't even messed with it since that last update. I was focused so much on why my position wasn't showing up the way it was supposed to. Whatever. Guys, let's get her done. I'll see y'all next week.
All right, man. Have yourself a good one. And we'll see everybody on Monday.